Okay, I think we're live. Hi, everybody. My name is Rebecca. I'm with the Philadelphia Department of Revenue and today about the four most common taxes in Philadelphia. I'm joined here by Jonathan List. He's a senior policy analyst here at the department. Good morning, John.
Good morning.
So this video is meant to be a very, very high level explanation of some of our most common taxes. It's not meant to be all encompassing, but it's kind of meant to be like a good start understanding and a handle on how taxes work in the city of Philadelphia. So we're going to include a really great case so that you can kind of see how they all work together. We're going to go through each one, and then we'll also talk about some changes that are happening. Yeah, here we go. Get the next slide. And just a reminder, this is the first video in a series of videos that the Department of Revenue is putting out, kind of as almost like a little mini series or explainer about how taxes work in Philadelphia. So this is the first one. It's an intro to taxes. The next one is a much more in-depth look at the legal authority that we have to tax. So you can get your nerd on with that video. And then the last one is really digging into how the business income and receipts tax works. And that is fascinating. I've gotten a preview of it and it looks really good. But today we're going to talk just very briefly about our tax structure and how we are allowed to tax, very briefly. Then we'll talk a little bit more in depth about the four major general fund tax types. That's the wage, earnings, and net profits tax, which we often talk about all together. The business income and receipts tax, that's our major business tax here. And then the real estate tax. We're also going to talk about the major taxes that support the school district, such as also real estate and use and occupancy tax. We'll talk a little bit more about some of the other ones that we didn't cover, but this is already probably going to be a really long video, so be prepared. Be prepared to take a few breaks. And then we're also going to talk about upcoming taxes and tax changes. There's a number of things that are coming down the pipe legislatively. So, okay. So let's get started. And as an introduction, everybody kind of knows that the Department of Revenue collects taxes, water charges, and other fees to provide funding for the school district in the city of Philadelphia. These funds are what supports crucial services such as trash collection, snow removal, police and fire protection, parks, libraries, and more. And if you really want to get into some of that, there's a really great video that the budget office has put out on the PhilaGov YouTube channel. So that's youtube.com/PhilaGov. They've been putting out some great videos about how, we're talking about how we get the money. Budget talks about how that money gets spent and provides opportunities for you to help influence some of those decisions. So, okay, let's keep moving. John, can you start off by telling us a little bit about how our taxes came to be? I mean, I know, as I said before, if you really want to get into this stuff, check out our other video. But in the meantime, John's just going to give us a little overview. Go ahead, John.
Sure. Thanks, Rebecca. Very briefly, the Sterling Act is the authority for many of the taxes that the city of Philadelphia imposes. This act gives us broad power to impose taxes and also limits what we can and cannot tax. On the school district side, the First Class City Public Education Home Rule Act is an important piece of state legislation. This gave the school district the power to tax anything that the city is permitted to tax. There are a few other important pieces of Pennsylvania legislation that are listed on this slide that either gave rise to certain aspects of our current taxes. So, for example, the First Class Business Tax Reform Act allows us to tax net income, which is what we do in the business income and receipts tax calculation. Or it specifically allows the city to tax items that are already taxed by the Commonwealth of Pennsylvania. For example, here, the first class school district liquor sales tax allows us to tax liquor sales for the school district.
And there's a lot more that we can get into on some of that stuff, so check out our other video. But a big question is, how much did we generate from all these tax types that, So John, do you want to talk about some of the revenue that we generated?
Sure. So overall, we collected a whopping $5.7 billion in fiscal year 20. We do not have final collection figures for fiscal year 21 yet, because we're still in the process of adjusting those numbers.
Right. And it's clearly most of the taxes that we collect, most of the taxes and fees that we collect go to the general fund. And so for those who don't know, the general fund is basically the bank accounts for the city that allows us, it's like one big bucket of money for us to be able to dole out into other little spending areas. And similarly, so the school district fund is its own separate bucket of money. So when we collect various taxes, they get divided up into those various buckets. Okay, so I think we've covered that. So now we're going to move on to major taxes that support the services that are paid for by the general fund, which is what is that big bucket of money that we just talked about. So the first ones that we're going to kind of tackle are the wage, earnings, and net profits tax, as well as the business income and receipts tax and the real estate tax. But there's a lot of other taxes at play here. John, do you want to walk us through this slide and talk about how much the city collected for the general fund in fiscal year 20?
Sure, absolutely. So the chart on this slide breaks down collections by tax type for those that support the general fund. So as you can see, business taxes clearly make up most of the pie, generating over 60% of our total collections. This is followed by real estate tax that generates about 1.3 billion overall. That includes realty transfer taxes. And of the real estate tax, $700 million of that goes to the city and the remainder goes to the school district. So although our other taxes collect less, they're still important to funding critical city services.
Yeah, you bet. So let's start and dig into that wage and earnings tax. So talk about who pays that tax and why it's so important.
Sure. Well, wage tax is extremely important for city tax collections. All employers must withhold a wage tax from their employees, and there are different rates and rules for Philadelphia residents and non-residents. An employee is responsible for paying the earnings tax if their employer doesn't withhold the wage tax. The rules for earnings tax are the same as the wage tax. For both, residents pay a slightly higher rate and need to pay the tax regardless of where they're performing their service, whether it's in Philadelphia or outside the city. For non-residents, employers are only required to withhold the wage tax for services that their employees perform in the city. During the pandemic, this really became a complicated issue, and we'll get more into that in the next slide. The city typically collects 40% of wage and earnings tax from non-residents.
Right. And before we get into the next slide where we talk about non-residents and residents and wage tax, I do want to just point out that very low income taxpayers can qualify for a lower basically what's essentially a lower tax rate. But the way it works is they pay the regular rate and then they can apply for a refund. So last year, City Council passed legislation that expanded that refund so that low income payers. And so far, about 1,500 folks have received a refund for taxes paid in 2020. We've also added the ability to apply online. And we've really tried to revamp that application so that it's in plain language and can be easily understood. There's actually big changes kind of coming down the pipe, like around wage tax refunds. So we'll talk a little bit about that more as we move forward. But John, do you want to talk more about some of the rules that we had, some of the clarification or some of the guidance that we published during the pandemic?
Sure. We did put together quite a bit of tax guidance actually for non-residents to determine whether they needed to pay the wage and earnings tax during the pandemic. Like the low income wage tax refund, non-residents can also apply for a refund online. And this year, as expected, we've seen a surge, a huge, basically a significant amount of individuals applying for refunds. So prior to the pandemic, and we've continued on with this policy, that if an employee is required to work outside of its Philadelphia location by the individual's employer, they are not subject to the wage tax. However, this obviously affects collections for the wage and earnings tax from non-residents, especially when we consider, hybrid work models, that are going to become very prevalent in the future. So today, non-residents don't need to pay the tax for days and weeks, that they're actually not working in the city, if their employer requires them to work outside the city. Companies today obviously are considering either semi-permanent or permanent remote work arrangements, and it's something for us to keep in mind as we discuss any particular changes to the wage tax.
Right. And I think that, we provided a lot of guidance on this topic. We didn't change our policy. That policy about the nuance between required to work outside or are you working outside of the city for your convenience, that's been our longstanding policy since the 90s and possibly even earlier. But I think that it still is hard for employers and employees to totally understand it. We put out we kind of put out an FAQ about this. We provided a lot of guidance on our website at phila.gov/revenue. So if folks still have questions, they can reach out to the department, but we put a lot out there. And so I'm hopeful that if you have a question, we've kind of put some language together to help you understand it. But similarly, so let's kind of shift to another tax type, the net profits tax. So we usually discuss these three, wage, earnings, and net profits all together because the tax rate is all the same across all three tax types. And John, you'll get into it. Why don't you tell us more about net profits?
Sure. Well, the net profits tax is paid by unincorporated entities. So corporations are not subject to the net profits tax like they are the business income and receipts tax. The net profits tax, as the name indicates, is imposed on net profits from the operation of a trade, business, profession, enterprise, or other activity in the city by Philadelphia residents and also non-residents. And like I said, it applies to all unincorporated businesses, whether it's a partnership or a limited liability company. And like the wage and earnings tax, there are different rates and rules for non-residents. And this tax also interacts with the business income and receipts tax. So when you're doing the calculation, a taxpayer may take a credit against the net profits tax, which is equal to 60% of the business income and receipts tax on net income, because there are two components to the business income and receipts tax, which we're going to talk about in a minute.
So I like to think of the net profits tax as, because only businesses that are not a corporation pay it. So if you had a corporation, what would happen is you as the owner would be an employee and you would just be paid through your payroll company and you would have wage tax withheld. But if you are not a corporation and you're not being paid as an employee, your salary is basically the profits of your company. Well, the net profits is essentially your version of wage tax if you're like a sole proprietor. It's kind of the way I sort of, that's why they're all kind of grouped together. It's like a very simplified way that I kind of think about net profits. John, do I have it right?
Yeah, you have it absolutely right.
Okay.
That's a good way of looking at it.
Right. I know it's not true for every situation, but like if you think about it, you're the owner of a company and you're not having wage tax withheld from your salary because you're not paid through as an employee. You're paid as the owner.
Mm-hmm.
Okay. So the other thing to just kind of make a quick note of that's interesting about net profits and wage and earnings is that basically in the 90s, Philadelphia had received funding from the state and to help it through a budget crisis in the 90s. The good news is we are in a far better position today. But part of the revenue that we collect for wage earnings and net profits goes towards a bond that was issued to the city to help bail us out in that time. It's a bond from the Pennsylvania Intergovernmental Corporation Authority, or PICA. So sometimes you'll see that word in the news, PICA, and that was the state agency that was formed in the 90s to do do oversight over the city's finances. And so when we're part of our wage and earnings and net profits taxes pay for that bond. And so that's just a side note about history. Let's move on to the business income and receipts tax. This is definitely a tax that we hear a lot about in the news. But the good news is that we have a case study coming up, so you'll be able to see kind of how it works. Even though it sounds kind of complicated, once you kind of see the numbers, and the numbers might even look a little complicated, once you kind of walk through it, you'll get it. And the good thing is this is a video, so if you need to rewind it and watch it again, you can. But John, talk to us about who pays the business income and receipts tax and how much they pay. And so just kind of give us a quick overview.
Sure. So real quickly, this is the major business tax that the city imposes, and it applies to every entity that does business in the city of Philadelphia. Businesses need to pay the tax for the year of their, actual activity, and also the following year in the form of an estimated payment. There are two components to the tax, and even if a company is in a loss position, it must pay the tax on gross receipts. So the two components are a tax on net income and a tax on gross receipts. The most important thing to highlight here is that we have a $100,000 exemption, so that businesses making less than $100,000 in gross revenue do not need to file a complete return or pay the tax. So as a result, a little over 2/3 of the approximately 120.
3/4.
I'm sorry.
Quarters.
3/4.
3/4, yeah.
Okay.
Of businesses don't have a tax liability because of the exemption.
Okay, so this, exemption is very beneficial to small businesses, and those businesses that don't have to actually file a return or pay the tax just need to actually sign a quick no tax liability form, or they can do it electronically by checkbox, and they don't need to pay business income and receipts tax. And in addition, new businesses don't need to make estimated payments in their first year of business. And this was sometimes considered a hurdle to new business formation. And there are also multiple tax credits available to businesses that reduce the amount of BERT that they owe to the city. And these credits exist for new and also existing businesses.
And if anyone wants a lot more information, and we will include all of this in the kind of the comments for the video when we post it on YouTube, we regularly do a very similar presentation at both the Free Library and the Community College of Philadelphia. So, there's a lot of free business support out there, and we are a part of it. And we make sure that we give this kind of information to small businesses as much as possible. So we do a very similar presentation that's maybe slightly longer in person, well, now virtual, but often in person. And so keep an eye out that with the Free Library and the Community College of Philadelphia. And we'll also include some more information about that in the comments. And so that being said, I get it. Like, all of this seems kind of like a lot and a little overwhelming. But John, you're going to tell us how they kind of work together.
Sure. And one point I wanted to clarify, I think I said that the exemption relates to total gross receipts. It's Philadelphia gross receipts.
Right.
So again, if your Philadelphia gross receipts are less than $100,000, then you do not have a filing obligation.
I think that's an important point to remember, that like you pay tax on the business you do in Philadelphia. And, so that, I think sometimes folks might not always understand that, but yeah, we're only, as part of that authorization language that we kind of glossed over, we're only authorized to tax the stuff that you do here in Philadelphia. So that's one other kind of seems pretty self-evident, but sometimes I think people are a little confused about it. Okay, so John, let's get into this example.
Sure. Okay, so this is quite a bit, if you're not really familiar with the tax calculation, but I think the easiest way to understand the relationship between all of these tax types is by going through an example. And this is also useful because you can see that changes to one tax type might impact collections for that tax type as well as other taxes. So in this example here, we have a a limited liability company, small limited liability company called ABC LLC. It's owned by a Philadelphia resident. They have a few full-time employees. One of their employees lives in Montgomery County, and so therefore that employee will need to have wage tax withheld at a different rate than the resident employees. So there are a few details about their sales and profits on the slides, and we'll use these figures to illustrate how much the company owes in Philadelphia taxes.
And just to hop in here, that this is a very simple example that kind of is just meant to help show you how these taxes sort of work and what like kind of a typical liability in this, just kind of an example. But the reality is you should be working with a tax professional. Like a tax professional is going to know your business, your unique business and your unique business challenges and situation the best. And so it's important that you work with someone who can help walk you through some of these things. Like I said, this video is not meant to make you an expert, but it's help you understand how these things sort of work together. So we always encourage you to work with a tax professional and to just take this example as an example. All right, okay. Go ahead, John. Sorry.
Sure. No. So a little bit of math here. So put on your thinking caps to figure out how.
You don't even have to put on your thinking caps if you file it online. If you file it all online,
True.
It'll all do the math for you. You just enter in. You just look at your federal. Basically, you look at your federal return and take all the numbers from that. In like 99% of cases. Yeah. In most cases.
Yeah. The calculation is done for you electronically, so there's a reason to file electronically.
Yeah.
So this company has gross sales of $150,000. They're all attributable to Philadelphia, let's say, and federal taxable income apportioned to Philadelphia of $120,000. So the tax on gross receipts is simply calculated by the Philadelphia receipts of 150 less the statutory exemption multiplied by the tax rate. So in this case, the tax on gross receipts turns out to be $71. Now, the tax on net income is a little bit more complicated, especially if you're doing business outside of Philadelphia as well as within the city, but we're not going to really get into that here. First, you need to calculate a statutory net income deduction, which is it's kind of corresponding to the $100,000 exemption. We're not going to get into the calculation of that here, but that is an important deduction that needs to be taken against income. So in this particular example, that statutory net income deduction is $80,000. Then the taxpayer also has a net operating loss carry forward from a prior period or periods of $10,000. So the total deductions in this case are $90,000, and that reduces the income of $120,000 to arrive at the income that's actually subject to Philadelphia tax. And in this case, that's $30,000 times the net income tax rate of 6.2%. Tax on income is $1,860.
So before we get to the next slide, so just to recap, basically in this example, we're saying that a business had $150,000 in sales, but $30,000 of that was expenses. They actually had $120,000 in income, right, of kind of profit, quote unquote,
right,
profit. And part of the way that $100,000 exemption works is that you also, you get $100,000 off the top of your gross receipts, but you also get like a portion of that. But you have to kind of figure out, it comes up with like a percentage based on how much profit you have. And in this case, you'll see in the example, you're dividing $120,000 of your profit divided by the $150,000 of your gross receipts. That comes up with that's how you get to that 80%. So 80% times the $100,000 is $80,000. So the size, basically what we're trying to say is we're assuming that the amount of profit that you made in Philadelphia to get excluded is 80%, right? It's kind of what we're.
Yeah, that's essentially what, how it works out. And
And
the way I
yeah,
like to look at it is it's just corresponding to it's a piece of the exemption of the gross
right.
receipts exemption that you're allowed to deduct for net income tax.
And that $10,000 of loss carry forward, that's just like you had a loss in a previous year and you're allowed to take it forward. Again, that's something that your tax professional would be able to help you understand and make sure that you take advantage of. That's just a number we threw in there as an example. So then you'll see that what we've done is we've added the $10,000 of loss carry forward to that $80,000 exemption. So you basically can take $90,000 off of your $120,000 of profit. So that's how we ended up with that. You're only getting taxed on $30,000. So, okay, next slide.
Okay, so you can see from this slide that the total BERT is you have to add the gross receipts tax of $71 plus the tax on net income of $1,860. Total BERT tax due to the city is $1,931. As far as the net profits tax, you start out with net profits of $120,000, and then, as I said before, there is a credit against the net profits of 60% of the BERT tax on income that's paid. So in this example, you can see the tax on net income for BERT, $1,860. So 60% of that, $1,116, you get to deduct that from your taxable income. And then, and I'm sorry, you also have to, the taxable income is multiplied by the resident wage tax rate in this case. And then from that product, you deduct the BERT credit. It's a little bit, it sounds more complicated than it really is.
Right. And then you've got the example there about which wage tax. You've got 2 resident employees. They're going to be taxed at 3.8712. They're going to be taxed at the resident rate, which, by the way, we'll talk later, does change. So you got to be really aware of it. And then the one person who lives in Montgomery County, they're going to be taxed at the non-resident rate. Again, working with a tax professional or working with a payroll company is going to help. It's going to help make a lot of that easier. Okay, so we're going to talk about how some of these, so there's been a lot of changes. We've kind of gone over some of them. So we talked about what they look like today. Do you want to talk us through how they've changed a little bit over the years?
Sure, and they have changed over the years. We've really eased the burden of the wage earnings, net profits, and BERT on businesses. It's impacted small businesses, like I said before, quite a bit. And we've also made it much easier to file and pay these tax types. So first, tax rates for all of these tax types have been going down each year over time. The wage tax rates have actually gone down anywhere from 12 to 15% for residents and non-residents. And the gross receipts tax rate for BERT has been cut by more than half since 2003. And there also is current legislation in place to keep reducing the net income portion of the tax. We've also made it easier to file and pay these tax types through the years. Rebecca spoke about several ways businesses can file and pay taxes today through Revenue's portal or modernized e-filing or paper. And apart from these changes, we've also eliminated the BERT filing requirement for businesses with less than $100,000 in revenue. And I think you said, what, 3/4 of the
3/4, yeah, like
tax filers?
75% of
Yeah,
businesses don't end up having a liability.
that is just huge, from a processing standpoint. And we also make, process improvements that improve the taxpayer experience, such as allowing wage tax refunds to be submitted online and also in bulk by employers. And the third and final way we've made improvements to these tax types over the years is by lessening the impact of these tax types on small businesses, like I said, and low-income taxpayers, through exemptions and refund claims. So by now, you should already know about the $100,000 BERT exemption. And Rebecca also mentioned the recent expansion of the low-income wage tax refund that can now be completed online. And finally, new businesses can also pay their BERT estimates in quarterly payments for when they file their second year BERT return. These would be the estimates for the third year. They have an election to make those estimates, to make quarterly estimates, or they can also make the estimate, one large, 100% estimated payment.
Right. Okay, let's keep moving. We're going to talk more about some of the other ways that we've made it easier to file and pay taxes as we go. But I do want to make sure that we get to the real estate tax. Let's see. So we're going to talk more about, let's very quickly, it looks like we've got real estate tax, the city portion. So real estate tax is paid annually, and it's based on the assessed value of your home or property, I should say, but that's divided up. So part of the money comes to the city's general fund and part of the money goes to the school district. John, do you want to elaborate?
Sure. So what I would like to elaborate on is I think it's the next slide, is the tax abatements or tax relief programs to help homeowners. And we've, quite a few of them. And overall, this is an amazing statistic, about 79% of city homeowners are enrolled in some form of real estate tax assistance program. Our three largest programs, the homestead exemption, the long-time owner occupants program, which we refer to as LOOP, and the low-income senior tax freeze, provide over 170 million in tax relief for needy Philadelphia homeowners. And the owner-occupied payment agreement is one of the most progressive in the country, and it offers affordable payment terms to homeowners with past debt. And some low-income homeowners can get agreements as low as $0 a month. As of December 2020, this program protects about 11,700 homeowners from property tax foreclosure. So it's really a lifesaver. And you can learn more about all of these city tax relief programs in our handout about tax relief and assistance programs.
Right. And again, we'll have links to all that stuff through when this is posted. Okay, so we'll talk further. I think I got ahead of myself just a minute ago. We're going to talk more about taxes that support the school district. So we're going to start with the real estate tax and the portion that funds the school district. As I just said, so real estate's divided into two parts. It gets a little funny because there's the rate, but then there's always on your bill, it'll have the two parts of the rate. But basically the way to remember it is that 55% of your real estate tax goes to the school district and 45% of your tax goes to the general fund. So we're going to focus here on the school district portion.
Sure. So it's important to pay your real estate taxes on a timely basis because, a significant portion of the real estate tax goes to the school district. It by far raises the most money for the school district. It's also one of the most stable sources of revenue for the school district. Collections for the use and occupancy tax and liquor tax were particularly impacted during the COVID-19 pandemic as companies closed up their Philadelphia locations, and also stay-at-home orders were in place. So those two taxes in particular were significantly impacted.
Okay, so let's talk to, there you'll see on the slide the two parts of that rate. Let's see, are we talking about use and occupancy next?
Yeah, that's the next slide.
Great, okay.
Okay, so the use and occupancy tax, which we refer to as the UNO tax, it applies to business, trade, or other commercial use and occupancy of real estate located in the city. There is a $2,000 annual tax exemption, which amounts to about $167 per month. If there are multiple businesses using or occupying the same property, the exemption is divided equally among them. And apart from the tax exemption, there are other types or uses of property that are exempt from paying the tax that's listed on the slide. So, for example, the portion of a property that's used for residential purposes is not subject to the UNO tax. Also, if a portion of the property is used for nonprofit business purposes, that is not subject to UNO tax. And also vacant commercial properties and property and portions of real estate that are used for port-related activities are also exempt from use and occupancy tax. Exemptions aren't granted automatically, so businesses have to report those when they're filing a UNO tax return.
Right, and UNO is filed monthly, and so I think we all kind of understand that like vacancy can change from month to month, that your occupants can change month to month, but generally like if you have a 3-story building, the bottom floor is commercial and then the top floor is the residential, you only pay UNO on the portion that's being used for commercial purposes. So UNO can get fairly nuanced, but like I said, this is just an overview, so we're going to keep moving. I'm going to talk a little bit about some of the other tax types. So for example, for the general fund, we also have the realty transfer tax. That is for when you buy or sell a property, that there's a tax imposed on the sale. And then of course we all pay sales tax whenever we buy anything retail at the store. You've probably seen parking and valet tax, especially if you've gone to park downtown or parked at the airport. And then also things like the beverage tax, which is on all distributed on ounces of distributed sweetened beverage here in Philadelphia for retail sale. The amusement tax, and then there's a few other kind of odds and ends that kind of bring up the rear at a small but important amount of revenue at 4.2 million. And then for the school district, we also collect the liquor tax, which was $60.2 million in fiscal year 20, and then the school income tax raises about 51 million for the school district. The school income tax is another one that kind of tracks the wage tax rate, and it only applies to Philadelphia residents on unearned income. So that's things like dividends or short-term rental income. So that's also a very, very important tax to fund the school district. Okay, so we're going to go over a few details of some upcoming tax changes. John, do you want to start us off with some of the tax rates, some of the tax rate and some of the other tax changes?
Sure. So starting in calendar year 2022, changes to our tax abatement program will go into place. Residential properties will receive the full 100% abatement only in the first year, and then the abatement is reduced by 10% each year for the next 9 years down to 0. Commercial properties, on the other hand, will receive an abatement that covers 90% of the new and or improved property value. So these are brand spanking new changes to the abatement programs. And another piece of legislation that will go into place as of January 1st of next year is the city's new development impact tax. You probably heard about this. This is a 1% tax on the improvement value of any new or rehab residential construction in the city. And I also want to reiterate that we have legislation in place that reduces the net income portion of the BERT over the next few years. And the city's 5-year plan also proposes a reduction schedule for the wage tax.
So one of the big exciting things that's changing for the Philadelphia Department of Revenue is the launch of our new tax system, and including a public-facing website, a new e-file, e-pay website called the Philadelphia Tax Center. So that's going to launch in November the phase 1 will launch in November of 2021, and it's going to start with the 8 major business taxes, including school income tax. We're pretty excited It will make, when it's fully implemented by phase 2 implements in October of 2022, it will cover all tax types and all of the fees that we administer. So phase 2 is going to include real estate tax, and we'll get more into that. But the big things to remember are that this is going to give taxpayers more flexibility to manage their tax accounts and the ability to apply for assistance programs and payment agreements online. You'll have secure messaging with our representatives through the website. And we're actually going through a process of rewriting a lot of our letters and notices to be, one, in plain language and to be more standardized. And the other thing that is really, really exciting, that I am most excited about, is the fact that it is completely translated. So our Spanish-speaking communities will be able to do business with us in the language of their choice. That will cover over 85% of our language requests, or about 85% of our language requests. And we hope that makes doing business with the city and with the Department of Revenue far, far easier than it has ever been. We're full push on promoting the changes, and we put out a guide. You can find all that information at phila.gov/revenue. And since we're on such a high note, I think we're going to wrap this up. I know this is a long video. So I thank you to everyone who stuck with it and is here at the end. But like I said, we do a much longer version of this presentation in person or live through the community college and with the free library, and also with any other organization that wants us to do it. So if folks are interested or they want us to do this presentation, we are happy to do that. I want to thank you, John, for being here and talking about Philadelphia's taxes with me. I also want to thank Shruti Arvind, who is who will help behind the scenes to make all this happen and was working all the slides, because it's too hard for me to talk and work slides and look at
and chew gum.
Right. I can't. No, that's not going to happen. But you can always follow us on find us on social media. You can always contact us through the phone or email. Eventually, you'll be able to do it through the tax center. And you can find a lot more information about all of these taxes on phila.gov/revenue. Check us out on YouTube, youtube.com/phila-revenue. We're there for you. So I'm going to end it and take a look at all the other stuff we've got online. Thank you very much.
Thank you.